In Chapter 8, we're going to cover home and auto insurance. Our learning objectives. First, we need to understand exactly what risk is and what risk management involves. As with many situations, the first step is to know where you are before you figure out what needs to be done. Do you have insurance on your home? What does it cover? Is it adequate? If you drive, you're required to have auto insurance, but is it sufficient to protect you? Let's analyze the factors that influence the amount of coverage and the cost of home insurance. Identify the important types of automobile insurance coverage. What do those numbers mean on your auto policy? And evaluate the factors that affect the cost of automobile insurance. Insurance, in its most basic definition, is protection against possible financial loss. Insurance companies are risk-sharing firms. They assume the financial responsibility for your potential loss for a fee. You buy an insurance policy, you pay a periodic premium. 3 terms related to risk. Risk is the chance of loss or injury. By definition, it's uncertain and unpredictable. Peril is anything that may cause a loss. Fire, tornado, robbery. Hazard is anything that increases the likelihood of a loss. Drunk driving, bad wiring in your home. Personal risk usually relate to loss of income or life. Can be caused by illness, accident, just old age. Property risk is loss or damage to property. Liability risk is loss due to negligence, which can result in injury or property damage. Pure risk is insurable. It's accidental, it's unintentional. The financial loss can be predicted and insured against. Speculative risk is not insurable. Looking more at pure risk. Pure personal risk, loss of income or life. Property risk, loss or damage to property. Liability risk, loss or damage caused by negligence, where negligence is failing to take ordinary care, not repairing broken steps, no fence around your pool. So how to avoid risk? Well, just avoid it. Don't go to dangerous neighborhoods at night alone. Reduce it. Put a tall locked fence around your pool. Or risk assumption and shifting. This is where insurance comes in. By buying an insurance policy, you've shifted the risk to the insurance company. This chart just reinforces the 4 risk avoidance techniques we covered on the previous slide. Avoid it, reduce it, assume it, or shift it. This chart is in your textbook and gives examples of different personal risk events, the financial impact, and strategies for reducing the financial impact. In each case, the strategies include personal resources, private and public sector resources. Let's look at just one of the personal events and its line items. The event is property loss. Financial impact could include catastrophic storm damage to property or repair and replacement cost of theft. Under strategies, personal resources include property repair and upkeep. Private sector resources include auto insurance, homeowners insurance, and joint government flood insurance. Note that under private sector strategies, insurance is always an option. This is Exhibit 8.2 in the book. By now, we should be used to seeing charts like this showing the steps in making some type of financial plan. In this case, an insurance plan. Step 1, set insurance goals. What insurance do you already have? How much risk are you willing to personally accept? How much do you want to shift? How much are you willing and able to pay to shift that risk? Step 2, develop a plan to reach your goals. Does your current insurance coverage meet your needs? What type of insurance is available to meet your goals? What's the cost of each type? Step 3, put your plan in action. Adjust your insurance coverage to match your goals. And Step 4, check your results. Insurance needs change over time. You should reassess your coverage periodically to be certain you have what you need. We'll look at each step in a bit more depth. The first step in every plan is to assess where you are and where you want to be. The same is true with insurance. What coverage do you have? Is it enough to protect you and your family in case of accident, death, illness? Is it enough to protect you in case of perils? We covered this in the basic chart. Remember the basic steps in developing any plan. Where am I? Where do I want to be? How do I get there? What options are there? Select a plan and put it into action. Check your results. Looking at property and liability insurance, there have been huge losses in the U.S. in recent years from major weather events. 2012, Superstorm Sandy, $18 billion in damages. 2005, Hurricanes Katrina, Rita, and Wilma, $50 billion. 1993, Midwest floods, greater than $2 billion. Hurricane Andrew in 92, $22.3 billion. Property damage included destroyed homes, loss of life, and destruction of businesses. Insurance is about all you can do to give you protection against such a huge loss. Property and liability insurance protects you against your legal responsibility for the financial cost of another person's injury or loss. Liability due to negligence results from a failure to take reasonable care. Vicarious liability results from your responsibility for the actions of another person, for example, your child. Homeowner's insurance specifically protects you against damage or destruction of your home, including other structures on the property, outbuildings, and landscaping. It can include additional living expenses for specifically limited amounts and times if you have to move out while repairs are being made. It is required by your mortgage company. Homeowner's insurance includes coverage for personal property inside your home, clothes, furniture, etc. This is usually expressed as a percentage of the value of your home, and there are limits on certain items such as artwork and jewelry. Homeowner's insurance also includes personal liability coverage for injury to persons on your property. You may need to consider adding specialized coverage for specific risks, such as earthquake or flood. It's recommended that you compile an inventory of your home. Make a list, such as that suggested in the graphic on the slide. A video of every room, especially high-ticket items, is also recommended, and include the serial numbers and brand names of applicable items. In case of damage or destruction, it's going to be hard to remember everything you had. The list and the video will go a long way to getting the recovery you need. And a copy of the list and the video should be stored off-site, perhaps with your attorney or your insurance agent for safekeeping. Most homeowners' policies include basic liability coverage up to around $100,000. This may not be enough for you to feel protected. Umbrella policies are available at a very low cost that provide coverage in increments of $1 million. A $1 million policy may run just over $100 a year. Very low cost for the added peace of mind. An umbrella policy is also called a personal catastrophe policy. Homeowners insurance includes medical payment coverage for minor injuries and extends to injuries caused by you away from your home as well as injuries on your property. That specialized coverage we mentioned earlier. Here it is. These are endorsements or additional policies to provide protection against specific risk. Earthquake and flood coverage may be needed if you live in an area plagued by either. We do. The New Madrid Fault extends into northern Mississippi. A personal property floater, and it's an added policy, may be required if you have specific items of high value: jewelry, furs, collectibles, artwork, silver. They have to be specifically listed and appraisals provided. When we looked at renting versus buying a home, we mentioned renter's insurance. A lot of renters never think about this, but it is important and it's relatively inexpensive. There are two forms. The broad form covers your personal property. The comprehensive form extends the coverage to all perils. Both usually include liability coverage. If you're renting, don't neglect this. There's 6 different home insurance policy forms. The basic one, HO1, is basic peril coverage: fire, windstorm, smoke, theft. The broad form, HO2, is wider coverage including damage from ice, snow, and falling trees. Special coverage, HO3, is the basic plus fraud, all other except earthquake, flood, and nuclear. Tenant form, HO4, is personal property only. Comprehensive, HO5, expands HO3 to replacement cost. And condominium, HO6, is personal property and building additions. Note that these policies usually cover credit card fraud, check forgery, and other miscellaneous charges. Now that you're aware of the varieties of insurance coverage available, the next step is to figure out how much coverage you want, how much you need, and how much you're willing to pay. Do you want to pay for replacement cost? Do you need coverage for specific items? Is the basic liability coverage sufficient, or do you need an umbrella policy? You definitely want a policy with full coverage. Coinsurance requires that you pay part of the loss. There are 2 basic claim settlement methods: ACV, actual cash value. This pays replacement cost minus depreciation. Replacement cost pays exactly that. It repairs or replaces all damaged or lost items. Some policies place an upper limit on this. The coverage, though, is going to run you 10 to 20% more than actual cash value coverage. Understanding what influences the cost of homeowners insurance will help you make informed choices. Location. It was important in buying your home. It affects your insurance cost as well. If your home's in a high crime area, insurance is going to cost more. If your home is in an area subject to severe weather, higher cost. Type of structure. Generally, a brick home costs less to insure than a wood one, but in earthquake-prone areas, wood homes cost less because they handle the stress of an earthquake better. Additionally, an older home may cost more as it would be harder to repair or replace it. Discounts are available if you have an alarm system, if you have smoke detectors, if you have auto insurance with the same company. A lot of differences, so you do need to shop around. Okay, we've got our home covered. Let's move on to auto insurance. All states have compulsory auto insurance laws. Now let's face it, around here your odds of being in an accident with a driver with no insurance are pretty high. So you need to have insurance yourself. Auto insurance covers two major categories of loss with subcategories. Bodily injury covers liability, medical payments, and a big one, uninsured motorist protection. The property damage component covers liability, collision, and comprehensive physical damage. And we're going to look at each of these starting with bodily injury. This coverage is for injuries for which you are responsible. The coverage is expressed as three numbers in thousands, as shown 100, 350. The 100 is $100,000 of maximum coverage for injuries to one person. The 300 is $300,000 maximum total for injuries to two or more people. And the 50 is $50,000 for property damage. Again, this is for damages you are responsible for. This graphic explains it again. The medical payment component covers medical care for persons injured in your car, including yourself. This is the component that covers you and your family if injured in or by another vehicle. Uninsured and underinsured coverage is protection if you are hit by someone without insurance or with insufficient insurance to cover the damage. The property damage component covers damage to another car or to such things as mailboxes or street signs when you are at fault. Collision pays for damage to your car regardless of who is at fault. If you are not at fault, your insurer will attempt to collect from the other driver's insurance company. Comprehensive covers all the things that can happen to your car not caused by another car. Hail damage, sleet, cracked windshield, fire, theft. And comprehensive usually does have a deductible. With no-fault insurance, each driver collects from his own insurance company for everything related to an accident. This sounds like a great idea to simplify and speed the system, but the coverage and laws vary by state, which can complicate actual application. For us, being right here near a state line, that could be a problem. If you choose, you can elect for added fees for your coverage to include wage loss insurance, emergency road service, and rental car reimbursement. Your insurance agent will recommend coverage, but the minimum is usually considered to be the numbers in our example, 100, 350, with the added safety of a $1 million umbrella policy. You need to have enough coverage to cover you if you are sued for an accident. Clearly, auto insurance costs vary on a number of factors. The year, make, and model of your car. Newer car, higher cost. More exotic, higher cost. High theft rate in your area, higher cost. Rating territory, where you live versus accident and theft statistics in your area. Driver classification. Age, younger is a higher rate. Sex, young men under 25, higher rate. Marital status, married, lower rates. Credit history. Remember we talked about this in Chapter 5. Your driving record and habits. Lots of tickets and accidents, higher rate. If your driving record puts you in a very high-risk pool, you may be assigned to an insurer that accepts those unable to obtain insurance normally. This will be costly. As with all purchases, you should compare companies, the rates, coverage, reputation. Discounts are available if you have a good driving record, you're a non-smoker, you have a security system on the vehicle, you have more than one car insured, same company as your homeowners. Or you can increase your deductible, but this usually doesn't reduce the premium by very much. As with previous chapters, I'll cycle through these slides for review without further comment, and this will end Chapter 8. This discusses your types of risk. Homeowners and renters insurance. Factors that affect home insurance. Auto insurance coverage. Factors that affect auto insurance coverage.